Hey traders, welcome to a global macro update. Hopefully you had a good Monday. Almost start of the month here, but not quite yet. We're going to start off this video looking at the SPX. So in this video, we're going to be looking at some global assets, different asset classes to try to assess global risk sentiment, basically to see if investors have a high tolerance of risk, low tolerance of risk, and then that would basically give some indications of where capital flow will be going. So the first thing we're going to be looking at is the S&P 500. This is SPX 500 USD. So it is the futures contract. So it's going to be not showing the gaps that you would normally see within the equities market, but what we currently see right now is a descending wedge on 2-hour chart. We see a very key level of demand at around 29.75. We see previously in the historic time frames that was a key level of resistance. As well, when we do look back on the daily chart, that was a major level of significance for the fib level. It was a 61.8 fib level, and it was a key level of resistance. When we broke above it, we got a huge move to the upside, and now that is going to be our major level of demand that we currently are holding above. And then we had a nice descending wedge here. Initially, I was thinking we could potentially melt down where we see a series of lower lows, and then we break that descending trend line that's connecting the lower lows, and then we pull back, retest the previous support as a new level of support. Ideally, that would be in confluence with the 29.75 zone, and then we get a nice retest. We can actually draw it or potentially even just find an example. So if we get a bars pattern, potentially something like this, where we get initially pushed to the downside. I guess it would have been like here. And then you get a nice little pullback, creating a previous support level as a new level of resistance, and then we get our next impulse push to the downside. That would have been option number A if this did melt to the downside, but we actually got a break to the upside. Like again, it's not really following overall, in my opinion, economic trends in terms of the health of the economy in the US as well as globally. Things are opening up, but there are increasing amounts of COVID cases, obviously due to the easing of the lockdowns. But in terms of the price action, it's looking a little bit more bullish, which is pretty crazy to say, but you've got to just look at the price action, especially during these times when there's such a dislocation versus the financial markets and the true actual health of the economy. So we do get a push to the upside. Let's just get our snip and discuss what we can see within the 2-hour chart on the S&P. So we had our first rejection here, and then our second one, and then we had our third one right here. We can see on the 2-hour chart we did get a rejection at that zone. So now it is a valid descending zone that we're working with, and then we see many rejections of the support zone where we get many type A and type B touches. So in my opinion, this is a valid descending wedge. We did get a break to the upside. We made a push, breaking the resistance and the level of significance horizontally. So now what we're looking for is that validation where that previous resistance is going to be acting as our new level of support. Once that comes into play, then we have a potential validation and now a higher low that we can work with in order to potentially get that next leg up for a risk on sentiment move. So that's going to be my analysis for the S&P. It did break towards the upside. I got to give it the respect it needs. That it did break the trend, not just descending but horizontally. So I think that's going to be the highest probable situation that we're going to be looking for the descending wedge. So in terms of the potential take profits or where the next key level of resistance is going to be, other than some pullbacks, which wouldn't be too surprising. We see previous resistance, wouldn't be surprising if we get a pullback to validate that level as well. But the next major significant level of supply is going to be this zone right here, which is around 31.50. And we can see if we're looking at the size of the descending wedge and then looking at where it broke out from, the take profit, if you're looking at it in geometry, would be 31.50, which is in confluence with a key level of significance that we can see within the previous horizontal zones. So that would be, in my opinion, the highest probable situation in terms of this descending wedge breakout. And we're going to basically trade in the markets with that in mind. So that's going to be, in my opinion, looking at the S&P, a risk-on environment where global investors are seeking risk, are seeking higher ROI, higher speculative investments. And we can see that within the really overall indexes around the world. We see the this is the Russell 2000, sorry, RUT or RTY if you're looking at the futures, did hold the support zone 1371. We were talking about this potential head and shoulders. If it does break the right shoulder, this is going to be the shoulder, the right shoulder right here that needs to break if the head and shoulders is going to be invalidated. And then the breakout point where the armpits are is going to be around 1364. So if it breaks beyond that zone, it's not only confirming the head and shoulders, which is a reversal pattern, but also the fact that this ascending trend line that's connecting the higher lows is broken as well. So that's going to be a validation that would turn this market into a potential risk off sentiment where global investors are running towards safe haven currencies, potentially gold, and other risk-off instruments. So as of right now, we are holding that zone. S&P looks like it's breaking out, and overall, it looks like global investors are placing bids on risk-on instruments. So this is the next index we're going to be looking at. This is the NASDAQ, and this 99.40 zone was held for multiple days here. This is the 4-hour chart. For around, let's say, 10 days, 11 days. It did break to the downside where we got a 4-hour candle to hold below the zone. We did get some wicks, but we did not get any candle closures at this zone. And this was significant in my opinion. You got a candle closure, you got a pullback, and it did close still at the resistance zone. So I do not classify this as a break to the upside yet. What we would need in order for us to classify this as a potential break of this new resistance zone, because it was a previous level of resistance, is we need to see this candle close a little bit higher, and then you need to see a retest. So this is a red candle right here, and you need to see some level of a retest before the next bullish candle, maybe a bullish engulfing candle to really signify the bullish push coming into the market. So that would be, in my opinion, necessary before I really look at this as a potential break. We closed marginally higher than the range high of of the previous candle, which isn't that significant. But overall, it doesn't look like there's a tremendous amount of buyers. It just looks like this is potentially still going to be validating this retest. Obviously, the S&P goes higher. That would be really great for this overall index. And if we do zoom in, we could probably draw a potential descending zone on the NASDAQ as well. That, I guess, did break. I didn't really dive in this far into the 1 hour. But as we get into the smaller time frames, I think that would be a better situation right there. It kind of does look like we are potentially forming actually a potential breakout for the NASDAQ as well, which makes sense because it's highly correlated within the S&P 500. But overall, that would be the structure that I would be looking for in order to see a break. Don't really see it yet. There is a key level right around here that I'd like to see break before we... Obviously, I'm not going to be looking to trade this, but this is just overall analysis of what investors are looking for. And then if we just are looking for potential zones, we have that as the first zone. You have the horizontal zone indicated right here. And you also have the size of the overall wedge, but wouldn't really be too eager to be looking and saying that we're in a bullish push until we break that 99.63, because that could be still resistance from this level of support. So a little bit early to tell, in my opinion, that it's broken the zone, and I still would classify it underneath the key zone in terms of the NASDAQ. All right, so now we're going to be looking at the volatility of S&P 500. We did see a drop in the VIX. I'd like to see it hold above this low if we are to see some bearishness within the S&P, if we are going to see a little bit of a sell-off. But, right now, because of the descending wedge break, it looks like we could actually get some bullishness within the traditional markets, which would definitely mean that volatility would be decreasing. I have no... so give me one moment here. This looks like there's no audio on the TikTok stream, someone says. There's no audio. How do you read candlestick trends? So, verify, is there no audio on TikTok? Let me know if there is or isn't. But I'll continue on, and I'll see if there's anyone who's able to hear my audio. Maybe not. Okay, so anyways, this is the VIX. And we can see it was a nice basing pattern. We have a low, lower low, lower low. So obviously this was a series of lower lows and lower highs. And then we were able to hold the low and actually form a higher low right here. So then it kind of looked like a basing pattern. We see this in BTC, we see this in gold, we see this in a lot of other markets and assets. And what we need in order for this to potentially be a basing pattern and for us to see increasing volatility, which would be bearishness for the S&P, would be for us to hold this higher low. If it breaks this low, then we would be range bound, and that's a lot less ideal. I'd like to see this bottoming pattern if we are to see the VIX increase. But if we are going to see a little bit of a sell-off and just a slow fade of the VIX, which it usually does, this is probably what we're going to be looking for. I'm just going to be looking at something like this. Oh, let's get our, there we go. I don't know what's happening with my mouse here. Give me one moment. I'm going to take out, I think that might help. So we might get something like this, where that's the sell-off. You might get a little bit of a retest. But overall, you know, you're going to get a slow fade like we saw after that massive spike in the VIX. You get first initially extremely aggressive, and then you just get a slow fade reducing in volatility. And these are the moments where the S&P is slowly climbing up inch by inch, and usually most markets take the stairs up and the elevator down. Not always. Crypto markets sometimes take the elevator up and literally jump from the top of the building, which is pretty crazy, but it happens. Not hearing anything now. Yeah, I don't exactly know here. Give me one moment. Let me just look at the settings here. I don't really see any issues. I'm changing the filter here. Not exactly sure. We will figure this out a little bit later, but we're going to go down with the video. So as long as this is range bound, you know, it doesn't tell me a whole lot, but if it does break the support zone, that is going to be a potential sell-off where the S&P is going to be looking pretty good for a potential long, or we're going to be looking at least for some risk on assets and instruments, basically. So that's going to be the VIX. Now we're going to be looking on to the global markets. So we're going to be looking at some UK. So this is the UKX, which is the FTSE 100, United Kingdom's index. You have the ASX, which is the Australian stock market, ASX 200. You have the, this is the UK, and then this is the Nikkei 225, which is the Japanese stock market index. And then you have the TSX. And they all look somewhat similar. Obviously, I'm drawing structures that make them look similar, but in terms of the huge sell-off that happened, which was basically a liquidation event across the entire board, to then a big bounce in risk on instruments like equities, we are seeing that we've broke a major level of significance to the upside, breaking a key resistance, and we've pulled back quite aggressively and formed a lower high on all these indexes, including the Russell 2000, S&P, Dow Jones. On almost every index, you have this high and a lower high. So we're in a position where we've formed a lower high, but we are still holding our support zone. So you could draw in a potential symmetrical triangle, you could draw in a potential descending triangle, but that's going to be the structure that we're looking for. And the S&P does look like it potentially broke out of a descending wedge, which you could draw in probably a lot of these structures, because you get the lower high. If you get a resistance turn to support, that could be a descending wedge breakout to the upside, but we can't confirm that just yet. The S&P did break, but a lot of these other indexes are still failing to try to break higher. So that's going to be the world index. Nothing really crazy yet. We are just squeezing, forming a lower high, and holding that support zone on basically all these indexes. All right, now, quick look at the US dollar. US dollar, let's get the 4-hour actually is a good discussion point. Christian says, can you look at oil at some point? Yeah, I definitely can look at oil at some point. I will be looking at oil before discussing gold and silver, which will be shortly after the discussion of US dollar and bonds, which is this current discussion. So remember that we were range bound, we were forming a triangle, we broke to the downside, and that hit target in terms of the range of the actual openness of the triangle. Massive move to the downside, and now, in my opinion, we're getting either a continuation pattern to the downside. If crypto goes up, stocks goes up, risk on sentiment, the dollar usually goes down. But if there is fear, uncertainty in the markets, this is going to move to the upside. So we see first resistance, little low, second resistance, third resistance, and then you see low, higher low, and that's going to be my ascending trend line. I'd like to see it reject one more time, because then you get 3 rejections. That will be a valid zone for me. 2 is not a valid zone. I cannot use 2 touch points or 2 rejections points in order for me to use that trend line as a valid zone. So I need that to happen before I look at this as a potential move to the upside, which would then, in my opinion, would be in confluence with a market sell-off probably, because you can't, well, you could have, but it's highly unlikely, and it wouldn't make sense in terms of correlations if you had gold go up, US dollar go up, stock market go up. It just wouldn't make sense. There's a relationship between the two, and there's correlations between different asset classes. So if we're looking at the stock market looking more bullish, especially with the S&P breaking the descending wedge, this should be looking more in favor of a potential sell-off, right? Because people are open to putting their capital in things like risk on assets, including equities, and crypto, I think, would be in that bundle as well. So if we do see this resistance get held really well, and then you see a slow kind of petering off where the dollar doesn't do much, and then you start to see a big bearish engulfing candle on the US dollar index, that could indicate a potential another sell-off where you're going to test this low and maybe even go further, breaking that previous low. Overall, does not look great if we break this ascending zone, although I said I would like to get it validated one more time and then slow crawl up, so then we get that third validation. That, in my opinion, would be a really good situation to be in. So that is going to be the video in terms of the US dollar index. I'm just going to look at some comments here. Now we're going to go on to crude oil here. Like Christian liked. Going to quickly look at some TikTok comments, and then I'll jump right into crude oil. And actually, we can go on the daily and start from there, because it's just been on a massive roar, to be completely honest. I did not think it'd rebound that aggressively, but it did. Yes, sir. Let's go. Oh, Christian, nice. So you're on both platforms. TVAX is done forever. Don't really know what you mean unless you think that there's going to be low volatility and just a slow increasing grind up within the stock market forever, which I don't think will happen. There is no audio. I really hope that audio is working now. How do you read candlestick trends? Okay, so at the end of the video, we can go over that. So I'll actually write it down because I did forget some stuff. So I'm going to write down candlesticks. Candlestick trends? I think you mean candlesticks. Not sure what I'll try to figure that out. Just made 100K today. Trading is easy. Congratulations if you did make 100K, but I can assure you that trading is not easy. Definitely takes a lot of time to actually sustain long periods of consistent profitability, and you really got to understand that you trade your system and nothing else. You have a system that you cultivate, that you experiment with through initially paper trading, simulator trading, and then you create a system in which you slowly increase your capital size as you profitably trade that system. So it's not easy. It takes a lot of time, takes a lot of discipline. It is definitely a psychological battle once you understand the technicals, once you understand the system. I could give you a profitable system and you could not make money with it because your psychology is not allowing you to, and systems might not work for other people, right? So I wouldn't be able to trade on a minute chart. I just do not like it. Or like, day trade using 1 minute candlesticks at stock market open. I just personally would rather sit back, look at the hour chart, and take a different approach, swing trade. But congratulations if you made 100K. I congratulate everyone who can make money and play this game for sure. I don't get why people think it's hard LMAO. Yeah, I definitely disagree with you on that one, but everyone's different. Bragg legit iron trading 2 months, hop on it, made 50 to 100K a day. So I definitely think you may not be telling the truth, but everyone has their way of going about life. Everyone has their way of trying to make themselves feel better. Everyone has a way of going about life. So I wish you the very best, my man. All right, now we're going to get into oil. All right, so let's go to the weekly chart and talk about this large time frame wedge that we did have. If we were looking on the really, really large time frames, so this is the weekly chart. One candle represents a week's worth of trading. And this is that descending wedge that we did talk about a little while ago here. We haven't talked about this in a while because we don't really review from the weekly chart every single day, every single weekday. Oops. All right, so we made clearly this is the descending wedge, obviously breaking supports and resistances within the zone, but holding the key level of descending resistance and descending support. We did have a massive sell-off from this 52 range that we were in for a while, and this was that massive liquidation event, and then we had this huge rally, and then now, this is why I like to start from the weekly, this $28 zone is a major level of significance. We can see back as a key level of support, key level of resistance. That's something that I do want to note on the chart when we are zooming into the smaller time frames. Mid-range zone, I don't really care about too much, but it still is something to note. Also, we can see there is a rejection off this zone, which isn't lining up perfectly with the next resistance zone, but it's kind of getting there. But overall, it is in a major uptrend here. We can see it's breaking resistances, holding supports, a lot of wicks to the downside. We do see on the daily chart, it did hold the previous high with a type B candle closure, where you get the candle closure right on the previous type A right there. So it did create a valid double top on the daily, but if you're looking at any time frame smaller than the daily, you will see candle closures above this key zone. So if we are looking at this as a potential double top again, the major breakout zone would be around $36 in line with the previous resistance right here. So that's going to be the major zone. So we are currently range bound with the resistance at around $40, support around 36, and that's just on the daily chart. But we do not want to fight trend. So in these situations, a lot of people might be looking at potential ascending zones like this and shorting here after it breaks support and retests as new level of resistance in confluence with the previous maybe zone like this. So you're looking at like that, like a double top, and then you're looking to sell right there. What I found is I just do not sell unless it breaks the market structure on a large time frame. So in this current situation, the market structure low would be around $36, $37 right here. So unless it breaks that zone, I'm not looking for sells. I could be looking for longs in a descending zone, in a descending triangle, in a descending wedge. I could be looking for ascending zones, but I really don't want to be looking for sells or even look at the market as a potential short biased move until it breaks this zone. Because we can see right here, even though it falls, you're holding supports, right? You're holding supports. Previous resistance, you're holding supports. It's trending up, definitely. And yes, you can say things about lockdown, COVID, this and that and whatever, but the price actions speak for itself. speaks for itself. We made a higher high. We're holding a higher low from this is the previous from the previous low. So we're just in a trending market upwards. And yes, we did have a pretty bearish candle closure on the daily on the second top of the double top. And let's zoom in on a smaller time frame. But overall, we're not really seeing that much sell pressure. Sorry, just yet. Doesn't mean that it won't happen, but I definitely think that I don't want to be too bullish on oil. But I'm just going to see if I can draw a little trend line that is able to connect these higher lows as well as previous resistance right here, potentially. Not really seeing anything I absolutely love in terms of trend lines. But let's just, yeah, I'm going to keep that there. I'm trying to draw a nice little trend line. I could get a squeeze somehow. So what I ideally would like to see is this resistance get held yet again. So this is going to be a key level of resistance I'd like to see hold. And then in a perfect world, you get a nice little ascending zone where you're going to get a squeeze. You might get a dump. And this is like the zone where I just say it's going to make up its mind. We're going to continue going sideways and it's not going to break this support zone. And I don't want to be looking for sells because it's not worth it for me to trade here to here if my stop loss is all the way up here because it's like a 1-to-1, 1.2, maybe 1.3. Not worth it in my opinion. I want to see the follow through. I want to get from here to here, not from like here to here. That just isn't worth it to me in terms of just market structure. So I would be looking for a break of the support zone, and it would be great if we would get an ascending zone that can confirm double confirmation. So we get not only a break of this ascending zone, but this horizontal zone. And then we'd be looking for continuation patterns with an ascending wedge, ascending or descending triangle, something like that. But that is the game plan every time. So that's going to be my analysis on oil. Right now, it's just a trending market sideways between a support, which is around $36, and a resistance at around $40. So I'm going to be looking at this as a base that if it does break towards the upside, we could be looking at more opportunities for correlated assets. If you're trading FX, it would be like Australian dollar, Canadian dollar is pretty highly correlated with crude oil, but that's going to basically be the analysis. Is not a whole lot. It's not extremely presenting anything that I would trade in my opinion just yet. We made a higher high. If we were, creating a series of lower highs squeezing against a level of support, that would be nice to see. But right now, we made a higher high, so we're not really contracting in volatility, and we are making some higher lows. So the high probability situation, just in terms of market structure, would be a symmetrical triangle, but I just don't see that just yet. Or potentially a melt up, where you get an ascending wedge, where this is the resistance, and then the support is much more ascending than the resistance, creating pressure and a squeeze like that. That could be a potential. And then if we get a squeeze up, that would be very bullish. That actually might be the potential I might be looking at actually. I'm just going to be cleaning it up a little bit because we see previous resistance right here turning into a first support, second support, third, fourth, but I'm just going to call that 3. So 3 touches is a valid zone in my personal opinion for an ascending or descending zone with a type A or type B candle closure, and then the resistance is yet to be validated. It's just 2 touches where you get our first validation and our second validation, but this could be a nice little ascending wedge melt up, meaning it's going to break resistance, retest it, and then go to the upside. That would be a ascending wedge melt up. We don't exactly know. That would be pretty crazy. But trend is your friend. At this point right now, with the market structure, it's looking like it is moving towards the upside. So we're just going to assume that it is going to continue because it would be in confluence with the overall market analysis that we are conducting today, where it does look like things are more bullish, where buyers are entering the market. There is a higher tolerance of risk, which is overall a risk on sentiment environment. So that's going to be oil. I think it might consolidate from this series of higher lows and this horizontal resistance, but we do have a lot of room for the highs up to 42, and then we do have quite a bit of room before we do get deeper into this squeeze of this ascending wedge. So that's gonna be my analysis, Christian. Christian says, thank you so much, man. You were really helpful. Some of the stuff you said confirmed my analysis, also added to it, so thank you. Yeah, I appreciate the engagement and the kind words. Thank you very much for saying that. I appreciate that big time. All right, so that's going to be my analysis on crude oil. Not going to get into it too much. And then something that I'm looking at right now that is piquing my interest is actually going to be silver. Not so much gold, but definitely silver. And we'll actually look at the gold and silver ratio first, and then look at gold and then silver to complete the precious metals section of this analysis. So this is going to be the gold and silver ratio. After breaking 108, we are definitely in a bearish trend to the downside. We've got a nice continuation pattern, which is our descending wedge meltdown. And then we're forming this, in my opinion, continuation pattern to the downside, this ascending wedge where you get a series of higher lows. It's really slow grinding up, and then you get these long wicks to the upside indicating lots of sell pressure. Obviously, this isn't an asset. This is just a ratio between the number of silver bars you can get for 1 bar of gold or 1 ounce of gold. And currently, it's just under 100. So if you can exchange 100 ounces of silver for 1 ounce of gold. And these are some pretty historic levels here. When it was at 128, that was the highest it's basically ever been, from my understanding. So obviously, if it's going to go one way to one extreme, it's probably going to go to another way to the other extreme at one point. And it does look like that shift is occurring where you see massive, massive sell-offs. This is a nice ascending zone that broke. And then you can also create a wedge right here, kind of like so. Oops, that's not so red. So we can see that obviously it might not be this aggressive. It would be nice if this was that aggressive for the next push, but I don't know if it's going to be. We'll see. I am really looking at silver, and if it does this again, I'm going to be really having a good time. But we'll see how it goes. But overall, it does look more bearish in my view. So I'm going to be looking. Overall, if it's bearish, it looks like the metals are looking good. If silver is rocketing and absolutely mooning, gold is probably doing well. Back in the late 70s, both metals were exploding. It just is when there is a metals market and there is a metals boom, silver is a higher beater, so it's going to appreciate at a greater rate compared to gold. But when it's in a bear market, when there is pushes to the downside, gold is going to keep its ground and hold supports better than silver. It's going to hold its value better than silver, is what I'm trying to get at. So in a bullish market where there's lots of speculation and people are rushing into metals, silver is the place to be. And it's a pretty good environment overall for precious metals, in my view. We already talked about how much monetary meddling there is. Funny how that goes, but yeah, there's a lot of countries that are printing a lot of money. We already talked about the amount of money that is increasing in circulation for many countries by looking at the quarterly and yearly change for the money supply, as well as looking at the monetary base. But that's not a single cause of inflation. You also have to see increasing amounts of velocity in the currency. So it's something that needs two things in order for inflation and hyperinflation to actually take place, for the CPI numbers to increase substantially. And once that happens, it doesn't, central banks, we'll do a whole nother video about this, but basically central banks only have two options: either be all right with inflation and hyperinflation, or raise interest rates and destroy easy credit, which would basically destroy the entire stock market, because a lot of companies are propped up on easy money. But anyways, we're going to get on to gold, and then we're going to jump into silver, which is going to be looking pretty promising in my view if it does a few things. So silver, gold is the first thing we're going to be looking at on the 12-hour. We do see strong push to the upside. We were in this trading range for a while and we broke above the trading range, and now we're testing the previous resistance of that trading range high as a new level of support. So overall, metals look pretty damn good. Gold is going to be the leader. It's like Bitcoin for the alts. If gold absolutely dumps to the downside, silver is going to dump to the downside. If Bitcoin dumps to the downside, Ethereum, Binance Coin, Link is going to dump to the downside. So we can see it's holding supports quite well. And on the 12-hour chart, we see a very well-respected bullish candle right here. Huge wick down. This is a nice hammer closing near the high of the candle range. We did get some consolidation where we're really not seeing a whole lot of movement within the price. But overall, we are looking like it's setting up to be a nice symmetrical triangle where you see 1, 2, and if we're looking on the 1 hour, we see multiple validations of a resistance, and on the 2 hour, we can see 1, 2, and 3 validations of a series of higher lows, creating our ascending support. So overall, we're seeing a squeeze where we're seeing lower highs and higher lows on gold, holding above with a huge wick to the downside, the 1760 support, which was a previous key level of resistance within our trading range. So it looks like we're exiting out of the trading range for gold, which will give the opportunity for silver to appreciate as well. So it all is tying together in the metals market for another potential strong push to the upside, with silver taking the charge, appreciating at a faster rate compared to gold, in my personal view. So that's going to be the analysis for gold, and then that will play into the silver chart, which in my opinion looks pretty damn bullish. So let's zoom out here a little bit, and we can see very well respected symmetrical triangle in my personal view, and the opening or size of the triangle is, if it does break to the upside, in line with this high right here at just under $20. This high right here is going to be the potential take profit of this trade if it does break and retest our current zone of resistance. So we can see very well respected series of higher lows. On the 6 hour, we do see the candle closure with a type B right on the series of higher lows with this ascending support. But when we zoom into the 4 hour and 1 hour, there is validations or invalidations of this ascending zone. But if we're looking at it from a larger time frame, super well respected, so we're going to treat it as such, as well as we're looking to use the resistance for a breakout zone. So the support does need to be well respected, but this doesn't matter as much because it's less noisy at the top. It's actually really nice in terms of a descending zone, because every single time you see the price near this descending level of resistance, the price instantly rejects off. A little bit, you see a type B, which is less ideal right here, with a candle moving up above the zone and then sellers pushing it right back down with a nice shooting star candle right there. But what you're seeing is basically sell pressure, keeping the pressure basically below a certain zone. But inevitably, I think it will break, and look how well respected this is. So what are we looking for? I think we could see some consolidation, kind of something like this. I wouldn't be too surprised, but that could be the potential. Because last time we did trade this move from here to here. Great trade. But we were in it for a while. We were consolidating for a little longer than we'd like. But that was totally okay. So that might be the trade right there. That might be the perfect situation for us to be looking for a long. And I don't mind holding there. I don't mind it holding the support because it did it last time within this descending wedge right here. This was the resistance zone right here. And this was the wedge support right here. And then the previous resistance was a new level of support right here. Very similar. This is a descending wedge. This is a symmetrical triangle. But overall, the structure of the setup is the same. We're looking for continuation patterns to the upside. And that is basically how I would do it. And then you're looking for validations. Once you see validations, you're in that trade. Or I'm in that trade, at least, as long as it's going to carry its momentum to the upside. And that's going to be something that I'm going to be looking for in the upcoming future. So that's going to be an overall analysis of the commodities market in terms of oil and then gold and silver. But if it doesn't break, there's no entry. There has to be a break and validation. There has to be a specific set of criteria that we're looking for in order for us to get triggered into the trade. All right, so that is the overall market analysis for the metals and the indexes. We're now going to go into crypto because, like we did say, the SPX, which is positively correlated with BTC, did break to the upside, and we'll talk about it a little bit more. It's right here. And it does look like we are getting that retest potentially on the new level of support. But we know on the S&P 500, which is a really good representation of the potential sentiment for risk on, risk off sentiment for global investors, basically, it does actually indicate a potential move towards the upside, breaking of the confluence zone of resistance of the supply. And once it retests, that's going to be a pretty good opportunity for potential risk on environment trades. And BTC is a really good example of that. What we're going to be doing is looking at the larger time frames first. So what we're going to be looking for within BTC is not much of a push up, but it's going to be pushing up into the range of around 95 or 96 in my personal opinion. We'll see how it goes, but that's going to be the key level of resistance that I think is going to have a lot of hesitation for the price to move higher. It's going to be really difficult, in my opinion, for the price to move higher. But in terms of the weekly chart, definitely doable. We're just in a trading range. It's very noisy within this trading range. It's, in my opinion, pretty difficult in order to try to get any follow-through trades. For shorts, they're getting stopped out. For longs, they're getting stopped out in terms of that extra push where you're getting that carrying momentum. You're not getting anything. And it's been like that since the start of May, where you haven't really had any follow-through swing trades like you're getting these range markets where you're seeing these nice ranges. But if you're able to day trade or maybe enter on a massive wick down, that's an opportunity. But I personally do not like to trade those setups where you just get a massive wick to the downside and you're like hoping just to like catch the very bottom. Not really my style. But gonna get a little bit of water and then we'll continue on. All right, so hello ALMU, Almu. Yeah, if you have any questions, drop them in the comments. That was from TikTok. And also on YouTube, if you have any questions, drop them in the comments. So on the daily, we're still holding our series of higher lows. So like we said, we are in a squeeze with a series of higher lows. Oh, I guess we could just draw it right there. A series of higher lows on the on the support. Higher low, higher low, higher low, higher low. And then we get a high, lower high, lower high. So in my opinion, there's going to be quite a bit of resistance at around maybe 95. I think I said 95 before. Yeah, around 95, right around here, 95.50 is going to be the key level of resistance that BTC is going to have in the near future. But in the short term, it does look like we broke out of a descending zone and we are squeezing between an ascending level of support on the 4 hour within this major zone right here. So let's get our support right around here. So we know that there's a key level of support and we're squeezing towards the apex right here. We did go beyond the projection a little bit, but when we do go on the larger time frames, that's just going to be a wick and it's going to be a candle closure right at that zone. So we held the support, we came back, we retested and held the support right here. That, in my opinion, once we came back up is a validation that that support is now held. We broke to the upside, and this is a symmetrical triangle break to the upside. It's a classic. So what we're looking for is a previous level of resistance right here. Key level of resistance once, twice, and it was a previous level of support if we just drag it down a little bit further. That's going to be a potential first retest zone, and once it pushes to the upside, it's potentially going to carry its momentum. We got our first key level of resistance right around here that we do have to potentially pass in order to get to the main level of TP that this setup is set to hit, which is going to be this zone right here at around 95.60, 95.50. I think that's going to be the better zone. So in my personal view, I think that's going to be the highest probable situation, and that will still be in line with our symmetrical triangle because we're going to get a push to the upside. We're going to have a key level of confluence of sell pressure here where there's going to be a lot of resistance, and then now we're going to move down and then continue in the squeeze of the overall structure, and then you're going to either get a move to the downside or upside. So in terms of the next couple days, it's looking a lot more bullish for the S&P and for BTC in my personal view. So I'm going to be looking at the market in that perspective, basically. And then we really wanted potential another level of support if it does go beyond that zone where we get 1, 2, and then a third higher low to hold there. And then you get not only the symmetrical triangle, but you get an ascending triangle and confluence with the zone as well, where you get that 91.80 zone as a resistance. So that's going to be BTC. It looks pretty favorable right now in terms of the longs. In terms of the shorts, I think it's a little bit not looking great. I would definitely be more long and short than at this point in time. Until we kind of hit 95, we have to reassess, but that's going to be the overall outlook and the overall trajectory that I think that the market's going to go into. Let's just look at a potential example, bars pattern, kind of like here. So if we get another bullish push like that, kind of like that, I wouldn't be too surprised, and then we would still be holding this squeeze. So I think that's definitely a possibility that we're going to be looking at in the markets. So that's going to be the end of the video. Quickly looking at some BTC stuff or some crypto stuff. Not a lot. Total crypto market cap excluding BTC has not changed much. It's still range bound. Previous resistance, new level of support, as well as a resistance right here. And you get a series of lower highs, which is adding additional supply or additional resistance at around the 100 billion mark for the crypto market. And then market cap dominance for BTC is really doing absolutely nothing because the market overall in crypto is doing absolutely nothing. So we're just range bound right now, not really doing a whole lot. And then we're not really going to get into a larger time frame structure, but we do see a series of higher lows. And then if we really zoom back, we can see some lower highs. So we are squeezing here, but if we're looking at them 2-day, which is still a large time frame, we're really not making any movement here. So not a whole lot to talk about in that regard. And then also you can compare Bitcoin with not just the US dollar, but with Euro and Japanese yen if you would like. So that's going to be the video of the day. I'll now open it up to some questions if you guys have any questions. And if not, I'll probably close the video off. And for people who are watching the recording, we do record every weekday. We'll do a global macro update as well as a crypto market update. Sometimes we do them in separate videos if there's a lot to talk about. But if the markets have not moved much, like crypto market has not really moved much for the past little while, so there's less to talk about overall. Yes, there are news stories and whatnot. We do go over more in the Performante Premium service, but overall, there's not a whole lot to do within the cryptocurrency realm in terms of trading. So it's good to backtest. It's good to go over previous price action. It's good to, read up on some fundamentals, try to understand the market more, all that stuff. Just carve out that little bit of edge ever so deeper so you can get a little bit more consistent, a little bit more of a higher strike rate and squeeze just a little bit more profit out of each profitable trade. All right, so I don't really see any more questions coming in, so I really appreciate you guys watching. Thank you very much, and until next time, have a terrific rest of the week. I guess I'll be talking to you tomorrow, but hopefully you guys had a good weekend. I definitely did. Went outside, enjoyed a lot of sunshine, and really ready to rock and roll for this upcoming trading week. So hopefully everyone had a great day. Until next time, have a good one.